Hello students and welcome to Legacy IAS Academy. In this session we will be looking at the study that has been done and released by RBI called as Priority Sector Lending, the Indian Experience. So we will see what the finding of this report is. At the same time we will see what priority sector lending is and what are the provisions under it, and of course the finding of the report. So what is the news? Of course RBI study titled Priority Sector Lending, the Indian Experience has been released. So we will be discussing all that. Now first things first, what is priority sector lending? See, the thing is, banks, the major thing that the banks do is give loans. They earn through giving loans only. They give you loan and then they charge you certain interest rate, a part of which leads to the profit that the bank earns. Some part of it of course goes to inflation, it goes for administrative work, this, that, salary and all that, the revenue, the expenditure, etc. And some part goes to the profit. That is how banks earn profit. Now there are different kinds of loan. One of the kind of loan, or if I have to divide a loan into two types, it would be mortgage loan and non-mortgage loan. Now mortgage loan is a loan in which you are keeping something with the bank and the bank is giving you loan on that. For example, home loans are mortgage loans. So if I take a home loan, what happens is the entire my house's document will be with the bank until and unless I pay the entire loan, only then I'll get the papers back. So that if I don't pay it, they can sell off my house. So that is mortgage loan. Of course, the interest rate would be less over here because they have an asset of mine with them. Non-mortgage loan, an example, classic example would be your personal loan. You are taking personal loan for marriage, this, that, etc. Now, then also background check is done whether you are earning or not, your capability, ability to repay, but there is no mortgage with them. So these are the two types. So where would the bank want to invest more and more? Probably here, right? Why? Because there is more chance of getting the money back. If not, they have an asset. This also they won't mind because for this they increase the percentage of interest, but then there is more uncertainty, there is less uncertainty here. In the same manner, there are different sectors where the banks would want to invest or may not want to invest. So let's say one sector is doing quite well, a lot of profitability and it is going to further increase. So bank would want to invest there. You know, if I want to open a business in that sector, the bank would be ready to give me the money because they know this sector is doing well. But let's say you want to do agriculture and for that you ask for loan. Now agriculture bank will think is not much profitable, rain vagaries are there, a lot of agriculture land is rain fed, you may not have irrigation facility, etc. So it's not a profitable business. So if I give you loan, how will you return? That is the point. So the banks may end up giving loans highly skewed in favor of certain sectors and against certain sectors. Certain sectors will be left without any loan or very small amount of loans. Right. So those sectors who will not be able to get much loan because of various things. I gave you an example of agriculture. Now what to do? So for that the government and the RBI came up with a concept of priority sector lending. What is that? That these kind of sectors, for example agriculture sector, have been classified as priority sector. And there is a limit which is given to the banks that minimum a certain percentage of your loans should go to the priority sector. So no matter what, you have to give loan to these sectors. Agriculture, in fact in the previous budget even sports was included. Now later on it can be excluded after some years. Agriculture is there since a long time and it will remain. Sports were added 2 years back and it can be removed, but right now it is in a priority sector. So like this you have various priority sectors wherein you have to give loan, certain percentage of your loan should go to the sectors which are classified as priority sector. So that is the concept of priority sector, and when you lend to this sector, that is known as priority sector lending. And RBI sets the limit. Of course the limit is set how much you have to pay. How much you have to lend to these sectors. That is what priority sector lending is. So if we have to look at formalized in 1972, why? to facilitate credit flow to such sectors which, though credit worthy, it may be credit worthy. See, even from agriculture you can earn profits. People are earning profits. There are big money landlords, money lenders who earn profit from agriculture and then give loans in the informal sector. So you are earning profits from there. So these sectors which though may be credit worthy, they are unable to access credit from formal financial institutions because of the reluctance. So that is why you fix a certain percentage for the banks which they have to give to the priority sector. So I hope the concept of priority sector is absolutely clear. Now coming on to the key findings of the study. So it has talked about improved asset quality. It has said that priority sector lending is responsive to asset quality, with higher PSL growth enhancing overall bank's asset quality. So it has seen a let's say correlation wherein when the bank is doing well with priority sector lending, their asset quality is also increasing. What is asset over here? Asset for a bank is the loan or advances. What is asset? Asset is something which is going to generate revenue for you. So what generates revenue for a bank? The loans and advances, they generate revenue for a bank. The bank gives you 1 lakh rupees loan, you return after 1 year 1,10,000. So the 10,000 extra is the revenue that has been generated. So loan or advances are the asset, right? So with increase in the PSL, there has been a correlation wherein PSL is increasing and the asset quality is also increasing. Asset quality means loan quality, means the NPAs are going down. That is what asset quality means. A good asset means you are more sure about that asset to give you return. A bad asset means the return may not come, converted into NPA, non-performing assets, so on and so forth. I hope that is absolutely clear. Further, developing niche in specific PSL. Now this is a very brilliant concept. What is that concept? As I said, that there can be different priority sectors. So one is agriculture, one is sports. Let's say one bank specializes amazingly in giving loan to agricultural sector. But under priority sector, there is bifurcation also, that if X amount has to be X percentage given to the entire priority sector, Y percentage should specifically go to agriculture. This is also there. So if this bank is doing exceptionally well in agriculture, it can only give up to Y because it has to fulfill X and also give to other sectors also. So the government came up with priority sector lending certificates. Now what are these certificates? If let's say I have to give only only Y percentage to agriculture, let's say I end up giving 2Y percentage, twice that. So what I can do is, Y is required for me. For the rest of the Y percentage, I can get priority sector lending certificates and I can sell off these certificates to other banks. I hope that's clear. So some other bank who might be good in sports, let's say required Z percentage, some other bank gave 2Z percentage loan to the sports. So that Z percentage they will keep with themselves, and for the remaining Z percentage they will have the certificate. This certificate will be given to this bank and this certificate will be given to this bank. In this manner, both will fulfill the criteria of priority sector lending in different sectors. So that is the benefit of priority sector lending. For example, you have carbon certificates. In the same manner, these are priority sector lending certificates. I hope so. Because of that, it has enabled the banks to specialize in specific segments, that you specialize in this, I specialize in this, and then we exchange the certificate, we sell off the certificates to each other and fulfill all the criteria. Further, achieving the PL target. So it has consistently exceeded whatever the priority sector lending targets were set. The banks have consistently exceeded these targets. So this is the good news. PSBs, public sector banks, have frequently met their 18% agricultural lending target. So basically you can see that the targets are being met. Now further, if we look, what are the, so I hope the key findings of RBI study is absolutely clear. Now let's see further more with respect to PSL. What are the objectives? Objective is to ensure that vulnerable sections of the society, underdeveloped, underserved society also get access to credit. Very, very important. Banks have to mandatorily allocate some amount of portion for giving loans to the priority sector. I hope that's absolutely clear. Now, mandated targets, important thing for prelims, differs from banks to banks. This is very important. Remember, this can be asked. They can say it is same for every bank or it differs from bank to bank. So this is your answer. And is 40% for scheduled commercial banks and foreign banks with 20% or with 20 or more branches, while it's 75% for regional, rural and small finance bank. Why it is 75% for regional, rural and small finance banks? Because they have specifically come for what? For financial inclusion. The reason to bring this and bring this was what? Financial inclusion. So that is why the higher target. On the other hand, urban cooperative banks to allocate 65%. Have to allocate 65%, but will have to increase to 75% by 25-26. So urban cooperative bank also had a higher percentage, which they have to further increase to 75% in the coming year. Okay, so that's all about priority sector lending. Remember the facts, remember what the let's say the findings of RBI was, and also remember the logic, the reasoning behind it. Thank you guys.